Guys, we have a massive, massive day for earnings tomorrow. This is earnings for a stock that is literally going under the radar. Most people are not paying attention to a company called HIMS. HIMS, ticker symbol HIMS, is an absolute example of a growth story, a growth stock. But people didn't make up their minds if this growth story is going to end or this growth story is just getting started. In 2022, HIMS grew by nearly 100% year-over-year growth. And last quarter, they grew at 83% year-over-year growth. Let me give you some of the numbers, and then I'm going to give you my own personal plays and give you some options for your plays when it comes to HIMS, whether you're bearish, bullish, or on the sidelines and don't know what to do. At the end of the day, it's up to you what you want to do. So if you make money, that's on you. Congratulations. And if you lose money, that's also on you. You played yourself. This is not financial advice. This is purely entertainment and education. And I absolutely recommend that you do your own due diligence and do your own research. Tomorrow, after the bell, November 6th, HIMS is about to do an earnings call. They're expected to have a negative 4-cent earnings per share loss. They're supposed to come in at $220 million worth of revenue. Last quarter, they came in at $207.9 million of revenue, and they beat expectations of $204.95 million. They also beat in earnings per share, coming in at negative 3 cents. They expected was negative 5 cents. So the question is, Adam, are they going to beat this year? Are they going to beat this quarter? And what do they need to do for the price to go up? Because HIMS literally went to $12 and now it collapsed to sub $6 and just recovered a little bit to being around $6.40, $6.50. If you stick with me in this video, I'm going to break it down and give you my key points of what I want to see in the HIMS earnings. But I think it's very important to understand that for the last 2 years, literally the last 8 quarters, HIMS has been beating revenue expectations. And for the last 4 or 5 quarters, they have actually been exceeding and raising revenue expectations and beating those raised revenue expectations. It's pretty freaking remarkable and pretty freaking amazing. So this quarter, the estimates is $220 million. And in quarter 3 of 2022, we came in at $144.8 million, which would mean that we are growing at 52%. Okay, remember, last quarter we grew 83%. Last full year we grew nearly 100%. And we are estimated to grow 52% this year. But if you go back to quarter 3 of 2022, the expected was $130.32 million. We came in at $144.8 million, which means we beat expectations by a whopping 11.1%. This is no small feat. And again, it is absolutely under the radar. Almost nobody's talking about HIMS. Almost nobody watches HIMS content. And everybody has no idea what HIMS is or what HIMS does. So let me explain it to you, and then I'm going to tell you what I'm looking for in this next earnings. HIMS is a telehealth company, so to speak, but not telehealth like Teladoc. Teladoc is really concentrating on telehealth, where they're seeing patients and giving them, health advice or health treatments or health appointments online. That's the bread and butter of Teladoc. HIMS, on the other hand, does telehealth to push their products. And what exactly is their products? The taboo for men and women. For example, for men, erectile dysfunction, hair loss, dermatology. For women, they have equivalents of dermatology, hair loss, and also contraceptives and things like that, birth control. They are getting into cardiovascular, they are getting into weight loss, and they're getting into a couple of other medications. But they don't deal in prescription drugs like narcotics, which means they're flying under the radar of the DEA, and that's no small feat. There's a new law coming out where if you're prescribing narcotics, that you actually have to see a patient physically. It can't just be online, which is a very good thing. You see, hair loss products, I actually use the hair loss products of HIMS. I speak extremely highly of it, and I really do stick behind the product. The secret sauce of HIMS is that they increase their subscriber count, and it grows like mad. So what I want to show you right now is a couple of screens. But before I show you these screens, This is what I'm looking for in the next earnings because HIMS has been absolutely disrespected. If you look at the price over the last 3 months and 6 months, and I've been warning about this for quite a while. Number one, I'm looking for a beat in revenue. I'm looking for a beat in earnings per share. I'm looking for an increased guidance, and I'm looking for a decrease in operational expenses while accelerating subscriber growth. Now, I think the beat in revenue, beat in earnings per share, and the raise of guidance, we call this a triple beat, is self-explanatory. But what about the other two? Decreasing operational expenses and increasing subscriber growth. It's quite simple. Last quarter was phenomenal, and we increased our subscribers, which is the secret sauce of HIMS. Why? Every single subscriber is a keeper after 2 years. We have a very, very, very high subscriber keeper count of over 90%. So every single subscriber pays its way in gold in the future. What HIMS needs to do is keep increasing their subscriber count. But last quarter was the first quarter in quite a while that they reached under 100,000 growth in subscriber count. Now, you can't just keep beating your own records. At one point, something has to slow down. But at 91,000 last quarter, it was a little weak. So we need to increase that. Also, the cost to get every single one of these subscribers went up last quarter. The spending is going up and subscriber count is going up as well. However, not proportionate spending to subscriber count as we had in the quarters before. And because of this, there were some short reports that came out and definitely a lot of love lost and frankly hate when it comes to HIMS, saying that HIMS cannot keep up their massive growth. And if HIMS cannot keep up their massive growth, they are no longer a hyper growth company. At the end of the day, all the revenue is coming from subscriber growth. So if the subscriber growth is slowing down, the revenue per subscriber either needs to drastically increase, which it doesn't. It's right around that low 50 mark, or the amount of revenue they're going to be making is going to be decreased. Because if you have less subscribers and the revenue stays the same per subscriber, then ultimately your total revenue is going to go down. Those are the numbers. That is the bare thesis here. Is it a hiccup last quarter or is it going to happen again? Take a look at the screen. Guys, this is the earnings last quarter. I want to show you the expenses, but let me just give you a couple of highlights. Revenue tool, 7.9 million. That's up 83% as mentioned. Net loss was only 7.2 million. The net losses keeps going down and down and down. EBITDA is earnings before amortization, taxation, depreciation, so on and so forth. Profitability of 10.6 million, which means the profitability from the actual corporation before GAAP profitability, before fancy accounting, was positive. And then EBITDA, if it keeps increasing and expenses decrease, then at the end of the day, you're going to get positive GAAP profitability, which is generally accepted accounting principles. That's why this quarter, we're supposed to get a negative 4 cents of earnings per share. Eventually, we get positive earnings per share. That means that we are GAAP profitable. Subscribers grew to 1.3 million, which is up 74% year over year, which is fantastic. But remember, we did not break 100,000. We only got 91,000 new subscribers, which is a lot less than normal. And then they raised their guidance. So we're going to be looking for a raise of guidance. They raised it to 830 to 850 million, and they raised their EBITDA for full year 35 million to 40 million. It's absolutely massive. And you can go to this and you see that the subscribers is 1.3 million. And the monthly online revenue per subscriber is $53. That means that we are getting $53 per subscriber, which is up from $51 in 2022, right? Revenue per subscriber up 4%. And actual subscribers is up 74%. This is absolutely freaking massive. Now, if you go a little bit lower, you're going to see gross margins. Gross margins keeps increasing too. Gross margins was 82% for the second quarter. We were expecting to have high 70s or 80 even. We keep smashing that, which means that we're going to have additional money to deploy back into the company. This is what I want to show you though. This is very, very important. If you go a little bit lower over here, you're going to see something called revenue. But you're also going to see something cost of the revenue, so how much it cost you to actually get this revenue. And as you can see, it's going up dramatically, right? Over here, we had 26 million from 113 million. That's 2022. Right here, we have 37 million of 208 million, let's call it. Now, gross profits is still going up. This is going up, right? Our cost of revenue is going up, but proportionately less than our revenue. This is good. But this is what people are starting to be concerned about right here, okay? Our marketing expense went from 60 million to 107 million, which means we're spending a lot more money to get these customers, these subscribers. The problem is we're spending a lot more money, but we're getting a lot less subscribers. Operation support went from 17 million to 29 million. Technology and development went from 6.8 million to 11.8 million. That's fine, not a big deal. General and administrative from 22 million to 31 million. So that's not a big deal either. 22 to 31, not a big deal. 6 to 11, not a big deal. 17 to 29, it's getting there. But this number right here, 60 million to 107 million, this is a really, really big jump. Although our loss from operations keeps going down. So our loss from operations was 20 million. Now our loss from operations is only 9 million. What we really want to see is our subscriber count jump and all of these costs proportionally to go up, but not as fast as they were. So we want costs to slow down and we want our subscribers to go up. Now, these are our subscriber counts and it looks great, right? There's a line going up. The problem is the line starts to flatten out over here. Our subscribers went from 500 million to 550 million. Then 554 to 646, almost 100 million went up. Then we went from 646 to 748, that's 100 million. 748 to 916, that's way over 100 million. 916 to 1,040,000, that is definitely above 100,000. Then we went from 1.04 million to 1.2 million. We went up by like 150,000. And then you get 1.2 million, 9,000 to 1.3 million. We only went up 91,000. Now, 91,000 is not bad. It's absolutely amazing. But think about it. All of these quarters were going up at least 100,000, some of them going up 150,000. And now we just go up 91,000. So then I want to bring you back to this. So our subscriber count is only going up 91,000. That's our slowest subscriber count. But our expenses is going through the roof, specifically marketing expense. This is a really, really big expense over here. So people are scared that we're spending more money and we're getting diminishing returns. So before you used to spend, let's say, throwing just a number out there. Before you were spending $100 to get one client. I'm just throwing an arbitrary number. And now they're like, well, now you're spending not $100 to get one client, but you're spending $120 to get the same client, right? And people are really scared about that. Other than that, everything looks great, right? It's through the roof. And this also looks not bad. But once you take this into account, plus these expenses, it looks bad. This is why you had the price of HIMS going down. Now, for the last 5 days, HIMS is up 13%. The reason why is HIMS actually started hitting that $5 mark. The interesting thing is, for the last 6 months, we are down 45%. When HIMS was here, right around this $9 mark, everybody laughed at me, but I was like, guys, I would not touch HIMS until it goes under $6. And HIMS goes right under $6 and it bounces back up. Now, I could be completely lucky, but I was saying this in my videos. Now that HIMS is right around that $6.50, you have an opportunity to do a few things when it comes to earnings. You can either buy shares outright, or what you can do is do a cash secured put. If you don't know or you are scared that the price is going to tank, what you can do is do a cash secured put where you are saying that you are willing to buy the shares at a lower price, a certain strike price, and for this you collect a premium. If the price of HIMS actually goes up, you get to keep the premium and do nothing. But if HIMS tanks, you get to buy shares and you deduct the amount the premium was to be able to get shares on a discount. You understand? Or you can buy shares outright at $6.50 or whatever it's going to be when the market opens, or you could do call options. Now, I'm not going to go into details, cash secured puts, call options, so on and so forth. That's up to you guys to learn. If you guys want to learn more, you could be channel members. I go over this in depth with my channel members. This is something that I do, and I actually make money doing it every single week. But you have a choice of what to do. Is HIMS going to beat? Is HIMS going to tank? I honestly don't know, guys. All I know is that I rode HIMS all the way from $3.50 to above 12 something. And I was able to make a good call at right around that $9 range. I sold out of my shares and I ended up consolidating and bought calls instead. For anybody that thinks that I sold out of my shares and I'm out of HIMS, you don't know what calls are. I consolidated to take out some profits and I used that to end up buying leap call options for January 2025. So I have skin in the game, but I was able to take profits and I made a lot of profits when it comes to HIMS. I'm probably going to be buying some shares tomorrow before earnings. It's going to be very interesting to see what's going to happen. If you think HIMS is not going to be able to reduce costs and their subscriber count is not going to grow by at least 100,000, then the price of HIMS is going to tank and you're going to get a chance to buy in, probably in the fours. But if HIMS can actually maintain their costs and increase subscriber count, this is the key over here. Can HIMS or can HIMS not increase subscriber count by over 100,000 and keep the same costs? Doesn't have to decrease the costs. If you keep and maintain the costs and just don't raise them proportionately to the amount of subscribers that you're going to get, HIMS should have a beautiful pop after the bell. We're going to see what ends up happening. Now, if HIMS can't grow the subscriber count and can't reduce costs, then HIMS has a much bigger problem. Now, HIMS can absolutely flop, which I don't think is going to happen. I think they are going to meet and beat revenue expectations. I think they are going to meet and raise guidance. And I think they're going to meet and raise EBITDA. Not to mention, they are going to meet and beat earnings per share as well. As a matter of fact, I think sometime in 2024, towards the end of the year, they're going to be GAAP profitable. Again, this is just my own opinion. You guys can do your own math. Now, HIMS is extremely on the radar. Maybe their best days are behind them, but at the end of the day, I stand behind HIMS. I stand behind my accent. I stand behind HIMS. I use the products. The product is really good, and I commend the CEO of HIMS to not get too loud with what's happening right now in the world. He's very outspoken, so to speak, and it hurts the company. So I'm glad that he's able to be a little bit subdued with everything that's currently happening. But at the end of the day, nobody cares what I got to say. I'm just a single investor talking to my audience. In the comments down below, please let me know what you guys think about HIMS, what you're looking for in HIMS. If you guys own HIMS, want to add to HIMS, want to sell HIMS, or on the sidelines and still didn't make up your mind. Listen, we can have a triple beat and HIMS is still going to flop because that's literally what happened last quarter and the quarter before that. HIMS is absolutely smashing it and it's still tanked. I don't think that if they smash it this time and raise subscriber count specifically, that is going to tank. I actually think the price is going to go up because we got absolutely decimated to under $6 and now we're consolidating. Thank you very much. Everybody have a great Sunday. Let me know what you guys are doing. Take care.